Hello, welcome to Forex School Uganda. I am Godfrey. Today, I want us to look at XAUUSD, that's gold as a commodity, to see where it is at right now and where we anticipate it get to in the next coming few hours. Now, if you're new to the channel, kindly subscribe, like and share the video, and turn on the notification so you are alerted every time I post new content on the channel, so you are alerted at the earliest. So, looking at the monthly time frame, we see that price is heavily bullish. We see that price broke out of this consolidation area to the upside impulsively. However, the upward pressure seems to be now waning down because we see these long rejection wicks on the upside. However, this candle still is able to be printing bullish, so we'll wait to see what really happens next. But we cannot bet against the markets, especially when it is printing green, and so we can confidently say that the monthly perspective of this time frame is bullish. So dropping down to this weekly time frame, we want to analyze it also. We want to dissect it a little bit to see what details it gives to us, whether it will also give us the same bias as we have gotten from the monthly time frame. So what I see here is that price has been ranging between these highs and these lows here and has not been able to break out of this consolidation area. However, on this last leg to the upside, there's something that happened in between the way. We see that price hesitated around this area, creating a minor area of resistance right here, which price was able to break above, and now it is in the process of moving down to retest it. And so such makes this an impulsive move to the upside, followed by this correction, and after this correction we can then anticipate another impulsive move to the upside to complete what we know as the impulse correction, an impulsive formation in the market. The price, while it was moving to the upside, some detail I wouldn't want you to miss is that it formed what we know as a W formation. After creating this double bottom right here, it broke above after forming a W formation, and now it's in the process of retesting this neckline, which would be the completion of the W formation, after which we would then expect another move to the upside. Currently, as it stands, price is testing this previous resistance now turned support, which is the neckline of the W formation, and so should be the completion of the retracement phase, and we should be able to see price turn around and move now to the upside. So our bias in the weekly time frame as well is bullish, and the reason is, now you see, when you look at this, you might think price has to necessarily touch this point right here, which is the candle closes, and I'm talking about this here. No, it doesn't have to. These levels are not necessarily points, but rather they are zones, and so this is a support area, not necessarily a support point. And if we take into account these wicks here, like this wick right here, or the tails of the candles that formed the support area, you can see that price right here is touching the support area or the neckline, which would be a completion of the W formation, and so we should expect after that bullish moves in the market. So now the bias on the monthly is bullish, the bias on the weekly is bullish as well, and so I want us to drop down to the daily time frame to see what it has to tell us, whether it will also give us the same perspective as the two higher time frames above it. Now, what I see when I look at this chart is that the price is testing this area of strong support, which if we extend it actually to the left, you can see that price has rejected this area several times. It tested it here and rejected it, tested it here again, was rejected, tested it here again, was rejected. Right here, it seemed to be able to break through, but just as quickly as it broke through, it again dropped back to the downside. Tested it here again, was rejected, then was able to break through it here, but then upon retest, it was rejected again, and now it is testing the same area, and we can only expect the same outcome, that just as it has been rejected before from the same area, it will be rejected again right here once again. That's one of the confluences that we have now in the market that gives us confidence that this market is bullish. So far we see that price is likely to be bouncing off this area, and it should be able to continue to the upside. But I want us to look still much deeper into it to see what other confluences we can get from this as a daily time frame. Something else I want you to notice here, that price, while moving back and forth, up and down, we see that price moved up right here, hesitated around this area, dropped a little bit, then moved back up, then came back down, then tried to retrace to the upside, was rejected, and now dropped to the downside. And if I could maybe zoom in a little bit, what kind of formation do you see here? It's a head and shoulders pattern, which is a bearish formation. However, one thing to not forget is that once the head and shoulders pattern is formed, we need to see the neckline retested to have it completed. Its formation is one thing, but its completion, the completion of its formation is quite something different as well. And so that's what we are anticipating to see, that price will retrace to the upside to come and retest this neckline right here that was formed during the formation of the head and shoulders pattern that we see right here in the market. And so this increases our confidence, because this is now a second confluence of factors, in the sense that price is not only testing and rejecting this support area right here, but rather also that there's a neckline that has to be retested for the completion of the W formation. And so that should act as a magnet for price to come up here to retest the neckline to complete the W formation. So that leaves our bias as bullish as well. I want us to also look at a third set of confluences to further solidify our bias and increase our confidence in taking buys in the market. So now look at this. You see, price in dropping to the downside, it moved impulsively to this area, then corrected a bit to retest this resistance area that had been left behind, and now dropped again impulsively to the downside, thereby completing what we know as the impulse correction and impulsive move or formation in the market. Now currently, you will notice that price moved impulsively to the downside into this support area, and now it is time to start a correction, because price does not move in only one direction, but rather it moves in the form of waves, which is in the form of higher highs and higher lows, higher highs and higher lows, or lower highs and lower lows, lower highs and lower lows, depending on which side is trading, bearish or bullish. Now we see that it moved impulsively to the downside. Now it would be the right time to start this correction to the upside, at least come to this now this area to complete at least a corrective phase of the impulse correction, impulsive move in the market. So that's another confluence in the market. Now the other thing I also want us to notice is that if we get our Fibonacci tool right here and take it from the high of this impulsive move to the low of the impulsive move, you can see that this resistance area is actually an area between the 50% and the 61.8 retracement levels, and so that should act as a strong magnet to pull price back up to at least those levels before the continuation to the downside. And so armed with this confluence as well, we can as well confidently say that we are anticipating price moving to the upside, at least for the short term, to come and test this resistance area right here. So what we'd have to do is to drop down to the 4-hour time frame and prepare ourselves for swing trading opportunities, and maybe further down to the 1 hour for our day trades, then the 30 minutes and the 15 minutes for our quick scalps. But let's drop down to the 4-hour to see a little bit what it has to tell us. So this is the 4-hour time frame, and if you could scan it a little bit, you can see that price moved impulsively to the downside, then moved up a little bit, tried to retrace, but couldn't move up so much. Then it dropped again with this bearish candle, and with this new candle after it, it actually dropped to these lows here, but then it was quickly rejected to the upside. And if I could zoom in, you can see that it left a pattern that we like to know as the W formation in this market here. And so now with this W formation, we can see that there was a neckline right here. Let me push it a little bit to capture these wicks here. You can see that price has just touched the neckline, thus completing the W formation. Now you can see that when price was dropping to the downside, it left behind certain gaps, like this gap right here and this gap right here, which would be able to act as a magnet to pull price, to attract price to it, so it can fill up those gaps that were left behind during the heavy move to the downside. So we expect price to rise to the upside in the coming hours. So let's drop down further to the 1 hour to see what it shows us. Now with this 1 hour, we see that price is now consolidating around this area here, and you can also see that price had formed some kind of minor head and shoulders pattern, which it has just completed with a retest of this neckline here after this drop to the downside. So you want to see how price reacts within this area right here. But the fact that it is consolidating in this area, we would need a breakout of this area to the upside, and maybe after the break, if we could have a retest of it and it holds, then we can expect price to move to the upside to go and retest the daily levels of resistance. So that's our analysis of gold today. Now we are going to go to the institutional order flow that is shown in the COT data, or the commitment of traders data, to see what the big players in the market, mainly the big banks, the billionaire traders, as well as the hedge funds, are actually doing in the market and what positions they're actually taking of gold in the market. This is the latest filing of the COT data, which is the commitment of traders, and it shows us the detail of the positions that these institutions are holding in the market. These are especially big time traders and hedge funds, as well as the big banks that do trade on the international scene. So when we look at the latest filing, which was the 16th of July, we see that the longs have been growing steadily. I mean, just imagine from 286 previously at the end of May to now 349,000 positions. Look, the previous filing that we had was 303,000, but the latest is 349,000. That is an increase by 46,000 long positions. Now we see that the short positions were 48 the previous filing, but this latest filing has 64,000, which also means that much as they are buying, they are also taking some off the table in the form of sales, which is currently at 64,000, which is an increase as well in the short positions by 16,000 positions. But there's something that you shouldn't miss right here, that the long positions are close to 6 times as much as the sell positions. These guys are heavily buying gold, they are heavily longing gold as a commodity. And you can see that even the net change between the longs and the shorts, the longs have increased by a number that is close to 3 times as much as the increase in shorts. So the rate at which the longs are being increased compared to the rate at which the positions are being closed in the market is incomparable. That also gives us confidence that we are likely to see bullish moves in the market. Then also, the other thing I want you to notice is the net positions in this column here. And I want us to focus mainly at the last filing, which is 285,000 net positions. And with the net positions, it's just a difference between the longs and the shorts taken in the market. And so we see the previous filing was 254,000, but the current most recent filing is 285,000, which is a net change or a net increase by 30,000 positions more in the market. These guys are heavily buying gold as a commodity. And much as we saw a bit of sales here, of course there are corrections in the market. Market price does not move in only one direction, and these guys have to also take or let price drop so they can knock out certain positions of especially small retailers before they can continue the direction that they are intended to take in the first place. So the other thing I want us to also look at is this open interest as well. When you look at the open interest, we see that the previous filing had 516,000, and now we see the latest filing is 579,000, which is an increase by about 60,000. I don't know if I have my math right, but that's a heavy increase. The net interest, the open interest, is also increasing. That means they're interested in longing gold, and so if they're longing gold and we have the USD as the quote currency in the XAUUSD as a pair, then that means as they are longing gold and shorting the USD as well, because one action on one is the reverse action being done on the quote currency within the pair. So if they are longing gold, they are inversely also shorting the USD. And so the USD being the hot currency in this pair, we are likely to see price move to the upside. So that's it for today. And if you're new to the channel, kindly subscribe, like and share the video. And also remember to turn on that notification button so you are alerted every time I post new content, so you're able to get it at its earliest. And maybe it could help you sometimes when I post this very early. If I don't have any issues with the internet and I post this early, then you could also take advantage of my analysis and execute your positions in the market. Thanks once again. I'll see you again.